Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're talking about how to use other people's money. As real estate investors, we're trained to use other people's money. We use the bank's money. We might joint venture and leverage a partner's money. We might syndicate a project and bring investors along for the journey. Robert Kiyosaki is famous for his assertion that your home is not an asset. An asset is something that puts money in your pocket, and a liability is something that takes money out of your pocket. What do you do in markets that are overpriced? Everyone needs a place to live. I hear that mantra over and over again. What if you want to live in an expensive city like, say, New York or San Francisco, Toronto or Vancouver? You've got an assessment to make. Let's look at Vancouver, where the median sales price for a 4-bedroom detached home was $2.5 million in the past month. Even a 1,000 square foot 2-bedroom condo in Vancouver averaged $985,000 last month. That represents a price decline compared with a year ago. But often, you can rent that same condo for $2,500 a month. Now, unless you believe that 2-bedroom condo is going to further inflate to maybe, $1.2 million, why would you ever take the financial risk of buying something that generates zero income at that price? Some people justify the purchase of their personal home by saying they deserve a nice place to live. And I get that. I have a lovely home myself. But let's look at the cost of owning that 1,000 square foot condo in Vancouver. If you finance 80% at 3.6% interest rate over 25 years, you'd be looking at a monthly loan payment of almost $4,000 a month. When you add property tax and insurance, now you're at $5,000 a month. And you've got to tie up $200,000 in equity just for the privilege of paying that $5,000 a month in holding cost. But wait, there's more. The owner of the condo has to pay $600 a month in condo fees. The monthly cost of ownership is a whopping $5,600 a month for a 2-bedroom condo. That comes to $67,200 a year. Now, on the other hand, let's imagine that you could rent that same condo for $2,500 a month. All of the things being equal, you would save $3,100 a month just by renting instead of owning. That 2-bedroom rental would cost you $30,000 a year. You'd have zero maintenance responsibility, and if the condo corp isn't properly capitalized, then the owner faces a special assessment to maybe replace windows or make repairs to the underground parking, you'd pay none of that. Now imagine that you took that $200,000 that you would have tied up in equity and invested it in real estate at, say, a modest 10% annual rate of return. You'd have an additional $20,000 a year in income, and you could use the after-tax portion of that income to further offset your monthly living expense. You could probably reduce your monthly housing expense by another 50%. What I'm describing here is heresy to many of my listeners. If you're going to make an investment, then only make great investments. As it turns out, I know an increasing number of professional real estate investors who've performed the exact same calculation that I've just shared with you and chosen to rent their personal property in amazing locations. They haven't confused where they want to live with where they tie up capital. My friend Robert Helms from the Real Estate Guys radio show says, live where you want to live and invest where the numbers make sense. I know that for some of you, what I'm saying is going to challenge some deeply held beliefs. Some of you will rationalize your belief by saying, well, you can't rent a place that's going to be as nice as one that you would buy. Well, today's show is based on real-world apples-to-apples comparisons. The truth is, there are foreign investors looking for places to park cash in real estate. They're buying brand new construction condos off the builder's plans and putting those brand new properties into the rental market. It's happening every day. The perception is that rentals are being rented to people who can't afford to own, so they have to be priced less expensively in order to be viable in the rental market, even if that means the owner is facing negative cash flow. You might be thinking the owner of the property paid all cash, and therefore their only expenses are going to be condo fees and taxes. That might be true. Then they've tied up $985,000, of which they would generate about $10,000 a year in positive cash flow. If they took that $985,000 and invested it properly, the way a professional investor would, then even at a conservative 10% rate of return, they could be generating almost $98,500 a year in income instead of $10,000 a year. The concept of other people's money doesn't just apply to investing. It can also apply to your own home that you choose to live in if you're looking to live in an expensive market where the numbers don't make any sense at all. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.